TradeTheNBI.com. This is John's report is for the 15th of March. The Ides of March are upon us, and the raucous behavior continues. So NBI weight still leading, and as soon as the open came about, we had a brief dip, tiny, and then the excitement over quantitative easing, the Fed jumping in to save everything all the time, and caught some attention. Tell that to some of the regional banks who people recognize better safe than sorry, and moving into the too big to fail. So that's been a bonus there, at least for some of them, not so much for your smaller local banks. Um, Brought us back over the 23%. And that was a strong steel, which we talked about. The pivot up would be enough to like hold position, but in this case, we actually got a lot of movement out of that. So falling orange, not with what you would consider buy configuration, but certainly somebody kicked in, and it probably wasn't regular algos doing this activity, because that was pretty significant from an NQ standpoint. It was already stronger. It already had magenta rising above white, so that was a bit stronger kick. And it's interesting with red DOC picking up, even while midterm buyers, and that's still not really in the case. So this was obviously big buys coming in off of the key support at the 50%, and it was significant for now. But you get a lot of people too that were moving towards, heavily wanting to short. And it's a great opportunity to squeeze them, which is perfect. Speaking of which, TLT here, yeah, didn't make any sense. Obviously, the huge push into treasuries, obviously driving yield down, but we knew it was going to come back. So it's just, you wait for it to come back to get your higher yield. You don't jump in with the crowd, but people do that. Oil, though, making new lows on this, so that's kind of significant, coming all the way back down to that 70 range. And I've said, economically speaking, you get into the middle, lower 60s, and that's enough to potentially stave off some of the difficulties that have been taking place with the exacerbation of oil. Certainly going to help with pricing and everything else. So I think that's relatively important. And if that continues in that fashion, I think that it makes it much tougher on the bear side, and or also the quantitative easing side that thinks that the Fed has to cut. Maybe it doesn't have to be as aggressive, but we'll see what the numbers start coming out. I think that there's good likelihood that the areas that hadn't quite suffered anything may stave it off, and that would be enough. We'll see. Gold, still holding on to those gains. There's no reason why it won't. I would think the same for the crypto space as well. Euro's been on a tear for no good reason at all, other than the liquidity. I mean, you think that it's bad for small savings and loans in the U.S. I mean, the eurozone, even worse. Turning to Bitcoin, obviously made new highs, but couldn't hold those the previous day, and not surprising. We had red leading on this one, and it was pretty extreme from a short-term buy situation. This is a lot similar to the gold, but I still think that it holds up fairly well over time here. I think that fear of currency collapse, those kinds of issues, definitely made for gold, Bitcoin as an alternative, particularly for those that like electronic mediums. ETH likewise doing the same. And yeah, I've been back and forth with the TS on the intraday charts. It's been going on and off on me again. But so I think that things have gotten more complicated, not less complicated. And the Fed stepping in this particular case, may give people some false sense of security in this. I think that there's just a real question as to what the earnings for various companies are going to be now that we're into the phase of the replacement costs at the higher inflation rate, and that may put a significant squeeze on margins. So we'll see how that plays out going forward. As always, though, I will update you on anything relevant. Trade well. We'll talk to you later.